Hello, everyone. This is Adam Wyatt, AKW Analytics with Bull Bear Analytics, here with the BBA Show, Episode 2. Here with Rich, and today we'll be talking about Mike Hearn, global macro and Fed stuff, and Ethereum, the parabolic Ethereum rally. So just to get started, this might be a little bit old news, but a couple weeks ago, we all know that Mike Hearn parted ways with Bitcoin. I remember back in early 2013, one of the first YouTube videos I ever saw about Bitcoin was one of Mike Hearn's presentations about decentralized autonomous organizations and corporations. And it was really one of the first talks that I heard that kind of opened my mind up to the future and possibilities that Bitcoin allowed. And so it's kind of sad to see him go, but he has been somewhat of a toxic figure over the past year or so, I would say. And just in the past couple of weeks since he's left, we've already seen Bitcoin Core launch an official website, open a Slack that's open to the public for public interactions, and looks like they're more open to a 2 megabyte increase, just to kind of bury this argument at least for a little while. So I think his exit maybe has incentivized people to become more constructive and get something done here. So it's good in that sense. But again, it's too bad that he had to go in the way he did. And, who knows if it had something to do with his association with the banking blockchain guys, the R3C, whatever they're called. But anyway, Bitcoin will survive. Bitcoin's fine. It's back up to almost $400. And it was only really maybe a 10-15% drop from the top. So I think Bitcoin will be fine. As far as Classic goes, I personally don't think it'll succeed what they're doing. But if it does, we'll tackle that dummy when we get there. Rich, do you have any thoughts?
Yeah, it's interesting. I had a similar experience when I was kind of entering the Bitcoin world. One of my first experiences was listening to Mike Hearn talk about all the possibilities about, Bitcoin's great, but let's even looking beyond Bitcoin, here's what we could the future we could see. And it was, wow, it was fascinating. He was moving, emotionally moving to think about a world like that and to really imagine being a part of it. I guess a very small part of me is sad to see him go. But with that said, his antics over the past, I'd even say maybe year, especially the last 6 months, just really got under my skin. And that's not an argument, obviously, that's just my emotional feeling. But let me just kind of talk about some of my experiences of the people in the Bitcoin space. Sure. He really to me was a pariah. I mean, I heard somebody describe it as a rage quit, right? And that I think is just the perfect
In fact, I think that was Bram Cohen, the creator of BitTorrent, who's actually called it that, which was great.
That's great. It's great because all I could see whenever he wrote that just scathing piece was just this kid who gets pissed off on Call of Duty and just, died 10 times in a row and didn't want to deal with the fact that he sucks. So he just hit start, quit game, and threw his controller down and vowed never to play again. Only to go pick up Battlefield 3. So that's just kind of been my experience of him. So, and I want to, couple that, and let me give the caveat that what I'm about to say is in no way indicative of this man's ability to program or be a leader in the Bitcoin space. But I had the great privilege of having a dinner with Adam Back. And, nice. we didn't even talk about Bitcoin the whole time. We talked about his lifestyle choices, his parenting style with his children, kind of odd things to talk about, but things that interest me, other than Bitcoin. And just I had a truly incredible experience with Adam, and I've never experienced him as a volatile, not in control of his emotions human being. And he's also a human being that understands economics, right? The intersection between technology and economics is fundamental to Bitcoin. And I think it's something that Mike Hearn truly lacked, that hurt him in the end. And instead of him, acknowledging that and pursuing more knowledge in economics, he decided that everyone else was to blame. Right.
Yeah.
So, you can go back to look at Mike Hearn's proposals to start blacklisting coins and see where that could, you could start to see some holes in his knowledge of economics and how the fungibility issue would come up with currency and money.
Right. And I think actually that's something that is prolific in the Bitcoin space is a fundamental lack of basic economic knowledge by a lot of the people who write code and start Bitcoin companies, unfortunately.
Right. And I think that's what's fundamental to this whole block size debate, from the people who don't understand the economic factors at play here, right? Like, there are unforeseeable consequences to changing the block size. Like, there just are. We can't predict everything that will happen. And so to just try to rush this movement makes no sense. It's not rational. It's not logical. And I would prefer that the blockchain be clogged, yet we still know that it works economically and technologically. Works maybe in quotes there, but at least it's still functional, and we can still go on to fix it in the future, than to rush to a decision and really destroy the whole Bitcoin economy. That's certainly a possibility. Not trying to be gloomy. That's just one of the many possibilities of this.
Yeah, I agree, but I also think that BBA first wrote about this, I think back in maybe January, February of last year, the block size missile crisis, as it was called. And so it's been a year. It has kind of been a while now that we've been talking about this. So, at this point, I'm fine with a 2 megabyte increase. I mean, in fact, you mentioned Dr. Adam Back. He proposed a similar kind of thing, a couple months back. I think it's fine. Just it can't be contentious. This has to be done by core with a consensus of the miners, or else we're going to have situations like we had about a week ago. I don't know if enough people know about this, but when Bitcoin Classic was garnering a lot of support and it looked like they were going to really shove this thing through, Luke Dash Jr., who a lot of people don't know, he's an old school, very prominent Bitcoin developer and coder and pool manager, and he merged or put a pull request into GitHub to change the Bitcoin proof of work algorithm, which would pretty much wipe out the entire Chinese mining monopoly. So, and that's a warfare tactic. And so, that kind of stuff is bad and toxic for Bitcoin. So I think if Core just went ahead and said, hey, look, we're going to add 2 megabyte block increase to our roadmap. That doesn't mean we're going to do it tomorrow. It means we're going to do it in 6 months or a year from now, but put it on there just to shut everybody up and so everybody can get back to work. That's my point.
The forward guidance.
Sure, exactly. Yeah, right. Yeah, well, let's call it that. That's a Fed day. We can use that rhetoric.
Yeah, exactly. No, but I like that. I mean, it gets everyone on the same page. It gets everyone plenty of time to prepare, and it's not a shock. It's not people can prepare for the uncertainty, and people like to do that. So I like that. I like that idea. I don't feel impatient. But either way, I think Bitcoin survives. I think I love this idea, this concept of anti-fragile, right? Like it's a fascinating word. It's a fascinating concept. And I think Bitcoin embodies that. So I think either way, Bitcoin survives. It's just, the turmoil and the volatility that could come in between could be really hard to stomach, especially for, people who aren't as ingrained in it. For the people who just rely on it every day, maybe in emerging markets or something like that, they can't stomach that, as well as like maybe you or I could.
Yeah. Well, this is we're for the first time in history, we're witnessing the monetization of a digital asset. So, I mean, this is going to get crazy, and if people are involved, they should know that. But, just to kind of tie a bow on this, Hearn quit. Let's call it rage quit. He called Bitcoin dead, essentially. And this is about the 100th time Bitcoin has been declared dead. So keep them coming, folks. Keep on declaring, the obituaries for Bitcoin, and the price will keep going up. So,
and I'll keep profiting. That's fine.
That's right. So, kind of let's move on to more some global macro stuff. Today was pretty brutal day for bulls in the stock market. We had a Fed meeting where they used some pretty confusing language. No traders seemed to be pleased with the statement. And just today on BBA bullbearanalytics.com, we posted a blog post about the U.S. dollar, a follow up to our previous post. So, any thoughts you have, Rich, about what's going on here? Yuan, dollar kind of stuff.
Absolutely. I've got a ton. I'll try to keep it short though. So first, just the very first thing, if you look at the Fed meeting minutes, I quote just this one sentence: given the economic outlook, the committee decided to maintain the target rate for the federal funds rate at 1/4 to 1/2%. Okay, so they're already right off the bat admitting the quote economic outlook. I mean, what does that admit right there? That they don't have the confidence that they had only 1 month ago, right? 1 month ago, they had the confidence to start this this rate hike quote cycle, and yet here we are 1 month removed from it, and they have already started to change their minds. That to me, like they already have no credibility with me, but that with the public,
that makes you nervous. Yeah, as an investor, you go, man, this isn't too good.
No, exactly. So let's talk about what's going on in the world a little bit. I think what's going on right now is a global liquidity crisis. I listened to an interview with John Burbank. He is a CIO of Passport Capital in San Francisco. Right. Brilliant man. Just a fabulous speaker as well. He was talking about how he defines price. Price is a liar. So in a world that we live in today, price isn't the same mechanism that we've always thought it to be, right? When you take billions and trillions of dollars and inject it into the market, you're going to get massive price distortions everywhere, which I think is what we've seen. And, he argues is what we've seen in the S&P and in, the U.S. stock market and in emerging markets around the world for the past almost decade up until the last year, right? We saw everything just like you're blowing into a balloon. Everything just blew up and blew up and blew up. And now all that air is being deflated out of it. And we're finally starting to get some price discovery that makes sense. That isn't about, leverage and debt and, massive amounts of monetary base increasing. It's about the real deal. We're getting some real price discovery and people are freaking out, and the veil is being pulled back on reality. And when I say this to people, some people look at me like I'm crazy, but I truly believe that if we're not already in it, the U.S. will be headed into a recession very soon. And I think that we're already in it, but just to kind of caveat that, it's possible that it's not here yet, but it will be soon.
Oh yeah, Larry McDonald on CNBC today, I think he's the chief economist for Societe Generale, upped his recession probability today from 15% to 40%. So wow. I mean, yeah, people are hopping on board with that idea.
Wow, that's I didn't see that. That's a huge increase from 15 to 40.
About, it looks like that's gonna happen, in my opinion.
Yeah, and I think that just shows that's indicative of the lack of knowledge in the media space, right? Like, they don't have a freaking clue what's going on, man. They just play the buzzwords. Freaking Jim Cramer, he tells you what stocks to buy, and
right.
They live day to day, where the people who make the money, who know what the hell is going on in the world, they look at the charts year over year, decade over decade. They're looking at the trends, the cycles, right? The business cycles. So I think we're in a pretty long-term deflationary period where all this debt that's accumulated over, decades, especially in the last decade, is finally coming home to roost. And there's a liquidity crisis, and now the prices are starting to show.
Yeah, and so what is that? What does that mean for Bitcoin? So, I heard you and one of these guys I follow, Pierre, a buddy of mine, actually had a discussion about whether it's better for Bitcoin if the dollar's weak or if the yuan's weak. and it was a pretty interesting exchange, and it kind of got me thinking, well, maybe both or neither. I'm not really sure. So what are your thoughts?
Yeah, so I think it was a little broader than just yuan. I think it's global inflation, right? Because everywhere but the U.S., we're seeing currency inflation, including China, Turkey, all the emerging markets. I mean, South America in general is nothing but inflation. Brazil, Argentina, Chile.
Venezuela. Venezuela has like a 720% inflation right now.
Oh, it like pains me. It's gut wrenching because I think about the people there that are suffering because of that,
Right.
And some of that's political, but some of it, or a lot of it, is the macro landscape. Even Canada is suffering from high Canadian dollar inflation.
Yeah. Right.
Yeah. So, all right, to bring it home to Bitcoin, we're looking at the global landscape other than the U.S. and maybe Europe and Japan as highly inflationary. And whenever I hear inflation, I immediately think about, okay, how do I preserve my wealth? Because my wealth could disappear day over day, by like 2, 3, 4, 5, 10, 12%, depending on where you live. You live in Venezuela, your wealth is halving overnight, It's crazy. So I live in that world. I want to preserve my wealth. I'm going to turn to gold. And if I can't get gold, I'm going to turn to Bitcoin. Some places it's easier to get Bitcoin than gold, depending on where you live. Maybe I'm looking at both. So in a world where the dollar is king, which it is right now and continuing to reign, and everything else is suffering, I want to hold things that preserve my value in my domestic home currency, right? So gold and Bitcoin. But then in a world where there's massive monetary debasement of the U.S. dollar, right? Like if they're printing dollars again, and we don't see a deflationary pattern like we did this last time, this is a probability, right? I think we could get inflation. I think we could get deflation. It just depends. But if there is, let's just that aside, we see QE4 again, people automatically think, okay, dollar inflation, and then you get the Western movement into Bitcoin, which, I think without that, maybe you get some price stability in Bitcoin from, China and other places, which is good. It's always great to see price stability. I think you move the Westerners in there. I think you start seeing institutional money move into Bitcoin, and that pops, and you could really see a quick movement, especially with the Bitcoin halving coming, is it this year?
Yeah, this summer.
Oh, wow. Yeah. So, I mean, wow.
Like 6 months.
What if everything aligns such that we start to see more of a melting down at the same time that the Bitcoin halving happens, and at the same, like shortly thereafter, the Fed announces QE4.
Right. Oh, man.
We could really see a Bitcoin explosion. Like, talk about the perfect storm of factors joining together to create like a really nice price pop in Bitcoin.
Yeah, I agree. It's interesting. Everybody says, oh, yeah, because the halving is known, these halvings are known from the beginning. I mean, everybody knows when these are going to happen for hundreds of years from now. Everybody's, oh, it's priced in, but I don't know how the market prices in something that's never been experienced before. We've never had a monetary instrument like this to where it wasn't controlled by a human, and by that I mean to where they couldn't change their minds. If the conditions were good or bad, the Fed, they could say, oh, last month we said we were going to raise, but we're not going to raise now. Bitcoin doesn't work like that. It's happening whether we like it or not, whether the conditions are right for it or not. And so I don't know how you price something like this in, but I do know from Economics 101 that if you decrease the supply of something by half and either keep the demand steady or increase it, price has to increase to reach a new equilibrium. So we're getting back to fundamentals, which markets are not used to, these kind of basics, because it's been so convoluted and made complex by these bureaucrats. But this is going to be a very interesting experiment. My guess is that, yeah, stars align and we do see a rally. But I at this point, and it kind of sounds like this too, it's more important. Price going up, great, but let's onboard people that need this thing.
Exactly.
Yeah.
Yeah, and people really do need this thing. I mean, if you look at some of the articles that you guys have posted on your website, we're talking about countries all over the world that are suffering 40, 50, 60, 70% inflation against the dollar. And that's massive. Losing purchasing power like that is bad. People suffer, and if people have the ability to preserve that, they need it, they need to know about it. One last thing I'll touch on. You mentioned
Sure.
you were just talking about pricing this event in. I find that phrase such, for lack of a better term, bullshit. I don't think that markets are rational in terms of, I know people, and people are not very rational. I think that they become rational in urgent situations, and when they act out of like necessity, that's when they become rational. But that aside, I'm talking about like pricing in an event like this. That would, if that were true, that would mean that every single unknown and every single uncertainty and possibility and probability has been calculated and factored into the current price. It's not possible. It's just not possible. Yes,
Right.
you can, about the Bitcoin halving, and you can think about what might be the price in the future, but you have no idea the externalities that could weigh and affect the current Bitcoin price at that time. So
Sure.
I'm not buying it, and I call it hogwash.
I do too, but this is something to think about. I spoke about this with my dad. I think it was probably back in the fall when Bitcoin was about $225 or something like that. And we started talking about the halving. And I said, in order for the miners to maintain their profit margins, essentially, on getting half the coins that they get now, price has to double. Right. And so essentially that's what happened over the next 6 months, was that price went from 225 to 500, I think, as a pricing in kind of mechanism in order so that the miners made sure that they could maintain their margins going into the halving. So at $500, I think they're fine if we go into the halving, but that's just pricing in just the miner interest.
Right.
That's not enough. If we were at $2,000 right now, I would say, yeah, maybe the halving's priced in.
Right.
But at this point, I really don't think it is. Yeah,
the halving being priced in with every other possibility, like, maybe the whole world seeping into a recession, which I think is not inevitable, but the probability is high. So I could see $500 being, I see what you're saying. I'm not going to try to reiterate it, but
minimum that the miners that have been mining for the past 12 to 18 months need to get in order to maintain their operations, I think.
Yes, exactly.
Yeah. And so this recent run up makes sense, but it's not enough going into what I think is going to be a pretty large event. So anyway, I think stars are aligning for Bitcoin, and it's interesting moving into the kind of the next topic, that given all of this Hearn block size stuff, a lot of crypto money, let's call it, quote unquote, has moved back into the altcoins. I mean, a lot of these things are up 4, 5, 6, 7, 8, 10x, 20x. Some of these small coins. I mean, it's ridiculous. And I have the feeling that a lot of these are exit pumps for debt pre-miners. That get on these crap coins. But the bigger ones are rallying too. The Ethereums, the Dashes, the Moneros, the ones that we watch, have been rallying alongside it on volume. And so, just real quick, I just wanted to share a screenshot just to kind of get back to what we do at BBA, which is price analysis. And this is a daily chart of Ethereum going back to the very beginning. And we can see here that we put in a nice base, and back in this area here, we didn't actually make an official trade, but at BBA, we were, in our crypto updates, we were calling to buy down here if these levels held, which they did. You can see a massive rally, hit resistance up here at an order block, and then we have the OTE zone and a bigger order block from these bull traps up here back in what was this, last summer. Yeah. And so you can see how these things are react. I mean, this price action so perfect technically that what we see here is the technicals driving everything. So we don't know what an Ether token is worth. We don't know what a Bitcoin is worth, let alone some other token that's values based on Bitcoin. Doing a valuation on this is impossible, and so the technicals have to drive it. It's a purely momentum, emotion-driven market, very tradable. I'm all for trading these things, but beware when you start seeing these parabolic moves. This thing could crash 50, 60% overnight. So it's nice to get these big rallies and feel like, we're all good traders and make a lot of money. But it's when these get up into these zones, take some chips off the table and just be glad you made some money. That's my opinion. I don't really have necessarily an opinion about ETH. I think it's fine. The more crypto projects with smart people in them, the better. But again, Ether as a token of value or a medium of exchange, I don't think so. But again, trade these things technically and be careful out there.
Yeah, and you do a great job of telling people where the technicals are. So I highly encourage people to subscribe and really pay attention, because you guys are spot on.
Well, I appreciate that's what we do. We're here to help people in this space, because again, it's really conducive to what we do, because value, like you said, how do you price in? How do you value something with so many diverging possibilities? It's really extremely difficult.
Exactly.
Value. It's extremely difficult to value a currency, period, because currencies are all relative value wise, and so the technicals really tell the story, which is why we focus on these markets, because they really do lend themselves to the technicals.
Yeah, that's awesome. Yeah, because you don't really have a lot of fundamentals to go on if it's still, to some extent vaporware, right? I mean, Ethereum only exists in certain aspects and not the full extent of what people want it to be. So then you really aren't. The value that you can see on those charts is only emotionally driven. So it's pretty awesome, the tools that you guys have to be able to call those price movements.
Awesome. Well, it's that, it's more than the tools. It's just having been around these markets and watching them day in and day out for years. You just get a feel for how these markets operate, and we found that it's helpful for people, and we like doing it.
Well, that's awesome, man.
So thanks, Rich. Do you have any parting thoughts on anything we talked about?
Nope. I appreciate you having me on. I always enjoy it, and I look forward to the next one.
Great as usual. All right. Well, we appreciate it, Rich, and thanks to everybody out there for listening. Visit bullbearanalytics.com for more information about what we do and our services and products. Until next time, see you later.